Well, there's been a fear in our sector of regulation, of over-regulation, and of possibly being turned into banks, in particular via MiFID II and what we call the ancillary activity test.
So Aviv, what's currently pushing the drive for Europeans' commodities markets?
I'd say there's two key drivers. Driver number one is the aftermath of the financial crash of 2007-2008. That precipitated a whole slew of financial regulations across the globe following a meeting in 2009 in Pittsburgh by the G20. And what we saw was various financial regulations put in place to avoid systemic risk. The commodities and energy industry got caught up in that, and that's resulted in rules such as EMIR, such as MiFID II and others that start to introduce financial legislation which impacts the commodity and energy market. The second driver is a set of anti-abuse measures. Because of alleged abuse both in the financial markets and in the commodity and energy markets, we've seen additional regulations being put upon commodity and energy market participants to try and stamp out abuse. And those regulations include the market abuse regulation, which is actually financial regulation but which applies to large parts of the commodities markets, the benchmark regulation, and also REMIT, which applies to gas and power. And it's a combination of those two streams of regulation that's led to where we are today, with commodity and energy market participants having to take regulation more seriously.
How can we ensure compliance measures without damaging the core of the business or the markets?
Well, there's been a fear in our sector of regulation, of over-regulation, and of possibly being turned into banks, in particular via MiFID II and what we call the ancillary activity test. And there's been a great deal of resistance to taking up some of these measures, and the implementation of those measures into the sector has taken time. I think the way to make sure that the regulations don't damage our business is really to embrace them, is really to think how can we function as a regulatory organisation, an organisation that embraces regulation in much the same way as banks slowly but surely have had to do that as well. If you compare the banking sector to how it was, say, 15 or 20 years ago, regulation is at the core of how a bank operates, and I think that if a commodity company or an energy company embraces regulations in that sort of way, thinking about how to effectively work within the regulated environment, that might be helpful in ensuring that regulations don't damage the business. That, coupled with being in communication with regulators, with those that set the rules, both at the pan-European and at the country level, in order to make sure and educate the regulators into how those rules should properly apply to our business, which is at the end of the day a physical business.
Do you think the market's mode of operation will be affected by the upcoming regulations?
It's difficult to say. Usually predictions made before regulations about how they'll impact a particular market turn out to be wrong or turn out to go in unexpected ways, partly because of unintended consequences and partly for other reasons. And those unintended consequences can actually be positive or negative. They're not always bad unintended consequences. But I think we might see, on the one hand, the makeup of market players being slightly different. We talk about certain players leaving the market. That might happen, but I think we also might see the emergence of different players, of smaller players who are better suited to working in the regulatory environment, who might embrace that more as well. And so we might see a change in the makeup of the market in the sorts of companies we see. At the same time, we might see liquidity affected one way or the other. It's difficult to tell whether more trading will move onto venues and onto exchanges or off them, but we'll certainly see a change in where trades get transacted, how they get transacted, and how credit risk is mitigated in those trades as well.
Well, thank you, Aviv, for speaking with us today. It's been a pleasure.
Thank you.
And thank you for watching. Don't forget you can catch other interviews from the Birkenstock event by clicking on our channel. Goodbye for now.